What's going on, guys? It's CryptoDave here at Top Tier Signals. Welcome back to our weekly market update series where we take a look at some of our favorite tickers on the channel, do some technical analysis, and find any sort of potential trade setups, whether for short or long-term trading. And for this week's update, I want to dive into 5 tickers that I am personally adding to my spot bags here in the crypto space, and I'm going to go over some DCA levels as well and share my strategy for adding these bags to my portfolio. And guys, if you like this type of content, you can subscribe to the channel, tick the little notification bell. You'll get notified every single time we post and you won't miss a single video. And guys, if you want to get access to our premium Discord, you can do so today with the link down in the description. But without any further ado, let's go ahead and jump right on into it. So I want to start with Bitcoin on the daily time frame, and it is my personal thesis that the past 6 months has really just been a large mid-cycle correction for Bitcoin. I think we got a little too exuberant in the first half of the cycle going into the halving with all the Bitcoin ETF excitement. We set in an all-time high sooner in a cycle than we ever have before. So I think it was very much needed that we had an extensive cool down period. We shook out a lot of weak hands within the altcoin space. Altcoins have come down 40, 50, as much as 80 or 90% since our top back in March of 2024, whereas Bitcoin has really just been in this parallel, slightly downward range, and we have simply been shaking out the weak hands, and stronger hands have been reaccumulating on each dip. Traders have been getting wrecked on both sides of the trade, but ultimately to me, this does not look like a true bull market top. This does not look like a true bear market either. I think that we are simply in the midst of a mid-cycle correction. And if you ask me, I think we are getting closer to the end of a mid-cycle correction. So once again, Bitcoin is coming back down to that daily order block around $50,000 to $52,000 per Bitcoin. We have also stuck in some nice bullish divergence on the RSI and the MACD. We've gotten these nice higher lows on our indicators, as well as a lower low in price. Usually this is a very good and strong signal on a high time frame of an incoming bullish reversal, and it's even stronger when this occurs at a level of support such as we see before us. So I do think that for Bitcoin, we are entering into a nice dollar cost average range, a range that could be friendly to long-term buyers especially. And even if we were to go a little bit lower, I do think that we would get some relief maybe around the mid $40,000 territory, as low as $38,000 for Bitcoin. This is about the lowest that I could possibly expect Bitcoin to trade, but I just don't think it's going to happen. And if it does, I don't think it happens overnight. I do think we get at least some temporary relief, if not an actual true bounce that kicks off a new wave of bullish price action. Now, it's unclear how markets are going to respond to this discount range, but we can see that with the bullish divergence occurring at a level of support, we can even look at the fear and greed index. We've been posting scores below 25 over the last few days, which counts as extreme fear. Every single analyst I talk to seems to be pretty bearish on their perspective of Bitcoin. This seems like a prime time to dollar cost average some spot. And I want to talk about 5 altcoins that I am personally buying in addition to Bitcoin this week. So let's go ahead and jump right into those charts. Just to put things into perspective, if we look at our Bitcoin season index over on blockchaincenter.net, we can see that over the last 90 days, only 29% of the entire altcoin market has outperformed Bitcoin. And generally speaking, when we see this level below 25% of the market, we tend to have some really nice altcoin buying opportunities. We have just moved back above that 25% mark, but I think that we are still ripe for the pickings when it comes to altcoins over the next 90 days. We are certainly sitting in a nice discount territory overall compared to Bitcoin. So I just wanted to share that with you real quick before jumping into my 5 favorite coins of the week. We'll also take a look at Bitcoin dominance as well. This is Bitcoin's market share relative to the entire crypto market. We can see that currently Bitcoin has about a 57% market share respective to the entire crypto market. And we've ultimately been propped up as we would expect in the late stages of a bear market and the early stages of a bull market, where all that capital, all that liquidity is coming out of altcoins more so than anything else. Bitcoin is regaining its strength in the market, and when the market turns itself around, it first starts with Bitcoin before that money moves back into altcoins. So this is exactly what we would expect, but we are trading at a pretty key level here around this 58%. We could see this level of support act as resistance, so to speak, on the ratio, and we are going to be wanting to see Bitcoin dominance truly break down out of this uptrend. Another area of interest that I have here is about 62% of the market. But the main thing that I'm looking at here on Bitcoin dominance that I want you guys to pay attention to is this 21 and 50 week EMA cloud with the green and the red lines here. The green is the 21, the red is the 50. So as we can see in a strong bullish uptrend Our shorter term moving average is going to be trading higher than our longer term moving average, and we're going to be using this cloud as support, which we have done really for the past year and a half. So the main thing that I want to see for Bitcoin dominance, which would give me a lot of confidence for altcoins, is to see Bitcoin dominance break below this cloud and to ultimately see the 21 cross below the 50 and then see the cloud act as resistance. I think if we get those three things, it will be clear as day that we are in an altcoin season and that true money-making moment within the cycle. Now, of course, the kicker would be that Bitcoin would also be in price discovery. That would be the cherry on top of it all. But that is the type of price action, that is the type of structure that I'm looking at on Bitcoin dominance. So the first altcoin I am buying, and this one should be obvious as it's on everyone's watch list, is Ethereum. There's just no getting around that Ethereum has improved fundamentally over the past couple of years. It is an institutional asset now with the ETFs, which I think has gotten very overshadowed just by the bearish price action that we've had lately, as well as all the election stuff going on in the United States. I think it's taken a lot of attention away from Ethereum, and we are now sitting at a nice discount territory to sneakily buy some Ethereum and add it to our bags. We're sitting on a former level of resistance, now acting as support 1 and 2 times. We can also see that we are setting in bullish divergence on the daily time frame with our RSI and our MACD histograms. They are setting in higher lows while price has set in lower lows respective to our daily candle body closes. So we are getting that bullish divergence at a range of support. I think this is an excellent buying opportunity for Ethereum. Now, of course, I'm not trying to encourage you guys to go spend all your money, transfer cash out of savings, deploy all your capital at once. Obviously, you want to be strategic. You want to take that DCA approach and you want to optimize your levels when you're doing so. But I do think that we are sitting at a nice discount range for Ethereum. This could be a great start to a dollar cost average, as ultimately I would expect Ethereum to sort of bleed out and become less and less volatile over the next month or two, while we ultimately see the bears become exhausted here. Now, a somewhat sneaky bag for this cycle, I think, is JUPUSDT. I think that this is a really great Sol ecosystem play. It is an excellent swap tool that is getting a lot of volume in the Solana ecosystem, and we know that Solana has been a winner so far in this early stage of our cycle. We know that that community is still very strong, so I think if you want to have some sort of proxy or high beta play with relation to the Solana ecosystem, I think Jupiter is a really good place to start. And I'm really interested in this 66-cent level that we just bounced off of. I was fortunate enough to DCA a little bit a few days ago. I will be waiting for it to roll back over because we do have this resistance looming ahead around 89 cents. So we got to be careful not to chase here on Jupiter, especially because if we do lose this support level that has been propping us up for the past several months, we could be in for as much as a 34% drop from this support level all the way down to our next clear support level around 44 cents. But nonetheless, it just goes to show that you can DCA properly and you won't really have to worry about these things. If you deploy a responsible amount of capital at one level and that level fails, you will still have capital on hand to back that bag up if it is in fact a bag that you want to hold for maybe 6 months, a year and a half, whatever your time horizon might be. Jupiter is a nice little addition to the bag. It's not going to be a big percentage of my portfolio by any means, but I think it's a great proxy for the Sol ecosystem. I currently am buying it around the 60-cent range. I say currently, I bought it a couple of days ago. I'm not going to chase this pump, and I'm of course going to keep my eyes out for any sort of further downside, but I do think that if we roll back over to the 66-cent territory, it could be a good place to start the DCA. Again, start the DCA, don't finish it in the same purchase, keep that cash on the sidelines and deploy strategically. There's no need to chase and there's no need to rush in. Now, TON is another play similar to Jupiter, just in the sense that they are both newer coins, sort of fresh to this cycle, and they have been getting a lot of attention lately. TON has been getting attention as an open network layer 1 blockchain, improving the user and developer experience in DeFi. I think it's a pretty interesting play myself. Now, obviously, this is not financial advice, but it has been a winner thus far this cycle. I think that this $4.59 territory is a great area of interest. I wouldn't necessarily chase the pump. Again, I was fortunate enough to buy a few days ago. Sometimes you just get lucky like that and you're able to pick up a really good level, but I do think it is a nice level to at least put in some capital for the chance that it does continue to hold. Again, if it does not hold, you do open yourself up for a considerable correction to the downside, as much as 36%. So you do not want to be rushing into any of these plays, but if you have that patience and that conviction, you can pick up your DCAs at the right levels over this period of time. Moving over to Ordi, I've always thought that ordinals were a really cool idea. Just the ability to inscribe data on Satoshis is really cool. I think it makes for a great proxy high beta play for the Bitcoin ecosystem. So I think that, as well as it being a newer, fresher coin, much like TON, much like Jupiter, I think this could be a really cool coin to have in the portfolio. And you guys will notice I'm touching on a lot of different narratives here. For me personally, if I'm building a bag of altcoins, I want to be able to touch on all sorts of narratives. I don't want to just be 100% in AI. I don't want to be 100% in real world assets. I want to have that exposure on all sorts of different narratives and some of the coins that I think are leaders of those narratives. So that way I have diversified exposure within the cryptocurrency market. I think Ordi is a great way to get some exposure to some Bitcoin proxies. And I think being a fresher, newer coin, trading at high discounts, you do have an optimal time, an optimal opportunity rather, to start that DCA process. The final coin that I'm looking to DCA this week is actually going to be NEARUSD. I do like the AI plays a lot. I think that Fetch or Render are also solid AI plays. I actually do have that a part of my portfolio myself, but I'm looking to get some exposure to NEAR as well to diversify myself within the narrative. I do think that the market structure is very clear. You are getting this clear regression channel. You're getting resistance here at this trend line. You're getting support at this trend line, and an optimal place to be buying near, I believe, is around this $2.70 range, $2.76, however you cut it. I think that this is a clear level of previous resistance and previous support. I think that this would be a great buying opportunity if you're looking to get that AI exposure. And once again, if we do break this downward sloping trend line and we are able to conclude the breakout with a nice retest, I think that things start to look very bullish for near. Well, guys, that's going to do it for this week's market update. I do think that we are in a nice reaccumulation territory for altcoins. I think that Bitcoin is about to come out of the other side of its mid-cycle correction. Now, there's plenty more steps that we need to check off the checklist if we want to feel bullish and confident, but I am willing to start my DCA approach in a lot of different assets. So let me know down in the comments what assets I should take a look at. What are you currently buying and adding to your portfolio? Are you even buying anything? Are you selling things? Tell me what's going on in your world right now. And until the next video, I will catch you guys in the Discord. Peace.